thank you for coming. We have about 40 minutes, and we are going to cover something called practical innovation. So I'm Charlie, and I'm joined by Steve. So I head our global payment solutions at CGI. So today is a pretty big day for CGI. CGI turned 40 today. It's actually, yay, it's a pretty big deal, actually. My wife turned 40 2 weeks ago, and we ended up in the emergency room last week for throwing her knee out. So hopefully CGI won't go through a similar over-the-hill event like my wife did. Yeah, so no driving for her, but she's still okay. So some of you may know CGI for our long heritage of SI and consulting and outsourcing, running Interact, ACSS, and LVTS here in Canada. But we also have a deep set of solutions, so products. So we run a payments hub system, we have financial messaging, we have financial crime, liquidity management, central market infrastructure. And it's those areas and those solutions that I have the privilege of having overall responsibility for. So I come with a heritage of working in telecommunications, in more of the retail side of banking, and now in the transaction and payment space over the most recent years. And I have generally been an agent of change, filing patents and bringing products to market. And so I feel very privileged to be here with Steve to talk about practical innovation. I certainly hope it won't be just Steve and I talking. A few folks, I can't see past the bright lights, but I said please heckle, and I actually mean that really interact. The better we interact, the less anybody will fall asleep, including me. So Steve, why don't you introduce yourself, and then I'll go into some of the slides.
So I'm Steve Molenkamp. I'm the head of channel sales for Ripple. Ripple is about 4 years old, so we're just still learning how to walk.
Yeah.
So we're much newer than CGI, and as head of channel sales, my job is to work with our partners. CGI is one of our most important partners, and the reason we do partner with them is they bring a whole set of technologies that we want to integrate with. So it's a very nice combination. We're an innovative team working out of San Francisco, about 125 people. We're a startup, and we do a couple things. One is we have new technologies like a distributed financial technology, cryptographic ledgers, deep expertise in that. We're also known as an alternative to the Bitcoin blockchain, a green alternative. So we do our consensus method a little bit different, a little bit faster. And we have our own digital currency on top of that. So most of the people in the blockchain space think of us as an alternative to Bitcoin blockchain. And then lastly, what we've done is we've built an application called Ripple Connect, which is an enterprise software product that we're marketing to banks that allows banks to send real-time payments over the blockchain. So we are taking our technology, and we changed our name. We used to be called Ripple Labs. We're taking our technology out of the labs, and we're bringing it out to market, and we brought that out last October at Sibos. And 6 months later, we've got quite a bit of interest from banks all over the world, and more than we can handle, so we need partners like CGI to help us bring that to the market.
So because you're a green company, we both wore green ties today to honor that for the environment. So let's get in then to the session. Now, you didn't know, but this was going to be a trivia session. So, and I didn't get the app. So this is the first one's probably one of the hardest ones. So we're not going to go right into it right away. Yeah, you're going to have to answer. Somebody's going to have to answer this one. So just, no, I'm not ready for it. People need to think. So don't blow the answer yet. It's actually an analogy for software as a service, and you'll see we're going to walk through that a little bit. How many folks are just interested? We don't have a live poll for it. How many folks were in the Agile development or Agile session earlier today? Sorry. So about half the room, actually. Let's get into that in a little bit. So one of the things about this light switch of why it's up here is that when you get home, you turn it on. And what does it do? Right? It works, right? It just works. So we'll cover a little bit about that. But what's behind the light switch, right? Do you understand all of the details of what it takes to make sure that light turns on? Do you understand the 100 years of technology that's behind so that when you get home and you flip the switch that it just turns on? It's something so simple to you and incredibly frustrating when you go to turn it on and it doesn't work. And you forget how many millions of hours were put in developing and making that system reliable to turn it on. So you don't particularly care about what sits behind it. You care about, does my light turn on? You care, does it always turn on when I flip the switch? Does it turn on even in a storm? Is it reliable? Does it flicker? People are more starting to care about what source of energy is behind it, right? Is it green kind of technology? And why do we focus on something like a light switch? Well, I think it's a platform for us to discuss a lot of things about innovation and specifically practical innovation. The real thing is, this is just like software as a service. You come home, you want your light to come on, and all the details that go behind that. You don't contract with the lighting company about how they deliver that to you. You just care that they deliver it to you. And when you don't have the light turned on, you're not paying for that energy. So it's a very basic of when you find vendors, when you find partners, when you go to need some kind of solution, you just care about the outcome. And you're going to see that that's a common theme for practical innovation. So there's 3 key points about practical innovation that I brought to the team, brought here, and I want you guys to challenge this. Well, we didn't write them down because they may be different by the end, but there's 3 key steps for practical innovation that throughout this day I want to cover. The first one is you have to have a business hypothesis. You have to have a hypothesis. Very scientific method. You say, I believe, and whatever the case is, I believe if I use a different clearing channel, I can drive additional customers into my business and differentiate myself in the market. That's your hypothesis. So then you engage your team, you engage the regulators, you engage solution providers, you engage those around you, and you actually try and solve for it. And then the third thing is you fail. That's a critical element to practical innovation, is recognizing that failure is more typically the outcome than success. And there's all kinds of benefits of failure that we'll go through. And then you rinse and repeat, and you build up some muscle memory around that. So let's talk a little bit more here about the practical innovation around the client first. So when you think about who you're going to use to go solve this hypothesis, right? You say, I'm going to go get the smartest person for a new clearing channel, and I'm going to build on a foundation of trust and key operating assumptions. So if Ripple happened to be headquartered out of China, would you probably do business with them? In the same way that if they're headquartered here in the US. Would you do business with CGI if they weren't local in your business? And you can take that to extrapolate, it's just the 2 of us up here as an example. So you have a foundation of trust and key operating assumptions that you bring when you need to look at innovation. You look at market and regulatory practices. So if you look at take the analogy of the light switch. You don't go out and inspect the transmission power lines. You don't go out and inspect a nuclear station and making sure that they're actually using nuclear power. You have a regulatory body and you have business practices, market practices, which you trust that company is operating by. And a lot of these sessions challenge are actually all of the partners operating under that framework. Is there too much burden? There's been all kinds of sessions of are they too burdensome? Are they too lax? Depending on whether a fintech or an FI. We do know that umbrella lives there, and so we have to be very mindful of it. A critical element is obscured complexity. If you're going to practically innovate, you have to make sure that whatever the technology is there is obscured. That you have to focus on the hypothesis, you have to focus on what the outcome that you're actually trying to achieve is, and the complexity of it goes away. The most elegant, the most successful solutions are one where it has the appearance of lack of complexity. And I think it was one of our speakers actually earlier today that talked about that. Jack, he was saying going back to the basics, and it's not a complex. You walk in, the store owner knows exactly the goods that you want to buy. It's a frictionless payment, right? There's not complexity in that environment, and that is a critical element. Timely features and capabilities. The reason I brought Agile was we talked about a little bit ago, we talked about in that session how you can bring ideas to market quicker. So somebody who was in the Agile session, does anyone want to kind of give a recap for the others or an idea of what Agile methodologies are? Anybody feel comfortable doing that? Yeah, go for it.
I can say that,
Sorry, speak up too, just I'm the only one with the mic.
right. So I can say from an agile perspective, it's like sailing a sailboat. You basically want to go from point A to point B, but you're tacking along the way. So
Mm-hmm.
you're going one way, and then you can correct the course. You can correct and head in the direction you need to go. And because you're doing it as you move along, and you're involving people as you move along, you don't end up at the end of the journey in the wrong place.
Right.
So that's, in a nutshell,
That's the best representation I've ever heard of it because it's so extendable. Because you say, well, we're going to plan the perfect sailing and we're going to go directly there because the wind is the exact right way, and then halfway through the wind dies. How do you respond to that? And in a traditional approach, you've pre-planned every aspect of it, and you're off, and you've got a year. You're going to go out there, and it falls apart, and you don't have the ability to respond. One of the things when I first started with Agile, I think it's actually a great tie into the practical innovation in 2006. It's a very basic structure. You get a team of everyone together, not just the developers, not just testers, but you get those from your regulatory body, you get those from your compliance team, you get operational members, and they actually sit in the room for that period of time. And gone is the construct that a team goes off and does work and then brings it for an approval binary, yes or no, we approve of it. They're actually in the room and they're collaborating. And so one of the things that Hank Bruder had talked about was that the compliance team members that were in Agile teams were some of the most creative. Because this is some of the first time in their career where they had actually been asked to help with anything as opposed to just approve yes or no, or somewhat be backed into a corner. Well, you have to agree with this because this is the solution we've built for the last 3 months and we don't have another option. And when they're in there day one. So when you go with Agile, you go about 2 to 4 week sprints, and you do a chunk of work where at the end of it you have a commercially viable solution. Now, what's really interesting, and this is the critical part about the hypothesis that we're tie back to the step one. The way an Agile sprint starts is you, in an old-fashioned way, and when I say old-fashioned, like 8 years ago when it really started, you get out a 3x5 index card and you write down what the system will do when the operator uses it, right? The system will perform an interest calculation when you click the green button, right? And you write that down. And then the very, very first step of that 2-week sprint is you go and you take that card and you walk over to the system and you do that and you prove that it doesn't do it. So that's actually how you have to start. So you start your entire work by putting your hypothesis of, I need the system to do that. And then you spend the next 2 weeks getting it to do that. And you spend the next 2 weeks with your compliance team. You spend the next 2 weeks actually with the customer during that time saying, we've gotten it to do the interest calculation. And then the customer says, well, I want it to do 2 decimal places. I want it to do 1 decimal places. I want a sliding scale. And during that time, you iterate back and forth. And so that's then the second part, which is the engagement. So the first part is the hypothesis, that you believe that you can do something. Second part is you get your engagement. And even then that third part, you might go through, during that 2 or 4 week period, multiple iterations of getting it wrong, getting it wrong, getting it wrong. And then finally, once you interview enough folks, it can come about. So that practical innovation piece starts with very step one is the actual hypothesis of what it is you want to achieve from a customer perspective. Not what does the technology do, not how complex is the system, but what actually is the output, and what is the perceived output by the end customer, the end user. And that really is the keystone here of the focusing on the output of the system. That to think about innovation, if you lead with technology, or if you lead with something, a tool that you want to use, just because it's neat or you think it's the latest thing, you will inevitably fail. Because it has no purpose. You go, great, we've now understood how it works. What do we do, right? There's no logical next step. Okay, so with this, we probably want to switch over to Steve for you for a little bit.
Yep.
And then guys are feeling a little drowsy out there. Feel free to come in and challenge the three.
I think there
three
was
items.
that joke in there in terms of how many consultants it takes to change a light bulb, but I couldn't figure out what the right joke was going to be. So,
Oh, I think it's 8.
is it?
Right. Oh no, that's a different group of people. But it's you got 1 to hold the light bulb and 7 to turn the ladder.
Okay.
So,
Okay.
yeah.
Okay. So just you've heard over and over this morning. There's a lot of innovation going on in financial services. I've been in rooms where, especially at the same, we'd go have a meeting with banks, and the first half of the meeting is them telling us why our solution doesn't work, and us trying to explain what it does. And then the second half of the meeting, well, the light bulb does go on, and all of a sudden we stop talking and they start talking to each other about, well, how's this going to change their business? So, we think we are innovating, and we're going to talk a little bit about how we think we're innovating and what differentiates us. But there is a lot of innovation. There's $120 billion worth of innovation going on. Hopefully that those valuations stay up so they can keep paying me. But part of it is we need to fail, but we also need to succeed. So, you see what's happening in financial services. You see these names like Square and Stripe and TransferWise, Venmo. A lot of people ask me, well, how are you different from them? And what I say is that a lot of these applications are actually just optimizing the existing stack. So they actually run on top of the existing payment rails. And that's great. I mean, I think we had a speaker today that was showing how they did that, and Venmo is finding ways to optimize flows between 2 different countries, and Stripe is helping you to make a payment over the internet. So those are all great innovations, but they tend to be at the top of the stack. So they tend to be improved customer experience. So what's special about Ripple? And I should say Ripple, but this distributed ledger, the internet, the broader capability and promise of blockchain is that it's really a fundamental change in how we settle transactions. It's a brand new rail. And for those of you that have been in payments longer than I have, or is there anybody that's been in payments longer than CGI for 40 years? But a new rail doesn't come along very often. So if you think of Ripple as a brand new rail that allows us to do payments in a very different way over the internet. And that's very transformational, because if you look at other industries that went onto the internet, what happened? So if you look at Amazon, so the retail industry over the internet completely changed retail. The news industry over the internet completely changed the news industry.
Twitter.
Netflix, others, right?
Twitter changed
Twitter.
the news industry.
So once we move from a private network to a public network, that's very transformational. It'll be very transformational for financial services. So that's our hypothesis.
It's interesting here that you have these stacks that are here. A year ago, it's actually 2 years ago, that CGI had first started looking at, even prior to Ripple, just doing distributed ledger testing, and then doing a Ripple before Ripple Connect was around. And where most of our clients were, and even where CGI was, and we've learned a little bit, was it was about getting a lab together and saying, well, let's prove that the technology works. Well, the technology works because it exists, and there's things that can be worked out. The complexity comes in when you have to think about how then the messaging will take place. You can't just think about you're going to use a new clearing channel and go with a Ripple prototype and then not have a trading partner that you're going to do it with, right? You need to actually have a trusted partner you're going to go with. You have to make sure that those two organizations do have common messaging platforms and your rule sets. And then, okay, well, if customers are going to have instant clearing, if something does go bump in the night and they submit at 3 a.m., do you have an operational team that will address that? How will you manage the client? What kind of expectations should they have? Are you staffed to prepare for that, to be able to address that? Those are the kinds of questions that then get raised out of the technology. And if you notice, all of them still come back to what is the customer's experience, and why would they then, why would you put this infrastructure change in? Well, it has to tie back to the customer.
That's right. So if you look at what Ripple does, by changing the settlement infrastructure, we then need to work on all those other parts of the stack, as Charlie said. This is our journey. So we started off innovating. We started off as Ripple Labs, and we met with all the innovation teams at all the banks. And we were so excited because we were getting calls from every single innovation lab, and we were doing 3 months proof of concepts. And then we left, and we waited for the phone to ring, and nothing was happening. And we called back the innovation labs, and we said, well, didn't you tell your business that we're going to do this? Like, no, we're now testing the new blockchain, or we're testing the new fintech. Our job is just to test all these different fintechs. And it's like, well, that's not helping us because we need people to use our technology. So we then started last year knocking on the doors of the business people, the people responsible for transaction banking. And again, that's how we learn. We failed fast. So we went out to those guys, and that's where they started asking a lot of tough questions. And we couldn't answer all those questions, so we started bringing in partners, and they helped us. We had some of CGI's best experts in our offices. And again, as we said, just started to work with these banks. And one thing we quickly learned about Ripple, you can't sell it to one bank at a time. It requires a friend. And not only that, those two banks should have an existing relationship. So we've learned again from that, hey, we should be selling to banks that already have correspondent relationships or have business relationships so that they trust each other. The blockchain can allow any two banks anywhere in the world to connect, but if they don't trust each other, they're not going to. And so that's where we started to shape that. Then we found out that if we integrate with one solution and another solution, there's no messaging standard. So we've come up with messaging standards. So we learned very quickly, two banks can't just connect to each other. They have to have an agreed messaging standard. We started that with a group of 5 very large banks who are helping us shape those messaging standards. The next step is, okay, well, now we have those banks able to send things to each other. We set the operating rules, so we work with NACHA, we work with Canadian Payments Association, we work in the UK with the regulators and with the payments groups to define the rules. And then, again, we started to create a consortium of banks. And the consortium of banks are going to shape multilateral agreements. So as we move up the stack, we start coming up with different problems we need to solve, but the way we solve those problems is we go out to the market as quickly as possible, and then we take feedback from the incumbent players.
Before you go to the next one, how many folks have actually been involved in an innovation project within their organization in the last recent history? Would you say that, show of hands, how many of them were successful? A few? Yeah? Anybody want to share what that success meant? Just interested?
We did a proof of concept with Ripple sector.
Uh-huh.
And it worked, and it was...
It did the job.
Lightning fast, right?
It was lightning fast.
So is there a logical next step, or is this another example of where, okay, we proved the technology works and we've gotten comfortable, and now, so what, I guess is the...
We proved the technology, we know it works.
Yeah.
But this technology is moving so quickly, we're not going to say, okay, yeah, Ripple's the answer.
Right.
Because there's somebody coming, racing past you in the background that's, so I think banks tend to wait to see what happens, wait to see how this blockchain technology evolves, and who ends up slightly Beta Max and VHS.
Mm-hmm.
You go with a Ripple, which ends up with a...
No.
Well, we got Blu-ray and you got Ultra HD, or
That's
yeah.
what I'm saying.
Yeah.
No, that's a good point.
There's an interesting statistic, and it was in our session just a little bit. Javier had talked about, innovations happening and how fast is it, and then he looked at Moore's law, and every 18 months processing has doubled, and that was predicted how many decades ago, and it's proved to actually be true. And about 4 or 5 years ago, a lot of folks came in and said, well, this is going to be completely fall apart in the next year or two because, we're starting to hit the limits of the physical structure of ions and what physics allows. And lo and behold, they've continued to work past that, and they're still on path. And so even along that, over the decades where we have seen the 18-year doubling of processing, it has still happened. So this is not a law like Moore's law, but this is another interesting statistic. Electricity. How many years from when it was introduced to the market till it had mass adoption? Anybody have an idea of how many years that took before it was to be accepted as a mass market product? 25? Anyone else? A couple of the takers? 46 years. Telephone. How many years before it was, when it was available? And this is just North America. This is not globally, because that would be highly skewed given. But any idea? It was about 24 years, I think. How many ideas on the internet? So web browsing? 7. How many years on Facebook from when it was introduced to when it was considered mass adoption? This is 2.5 to 3, right? And so it actually has a straight line correlation of mass adoption of new consumer usage items. If you then actually look at that, every year, the time that it takes for something that's introduced to the market to be adapted on a mass basis, you lose 5 to 8% of your window every year. So that means if it took somebody a year to go to market, a fintech or somebody disruptive, that same company next year, it'll take them 11 months to do the exact same thing next year. And then the year after that, a little over 10 months. And the year after that. And so the acceleration of companies, the acceleration of new consumer behaviors has also, like Moore's law, accelerated. And one could say, well, we've reached a logical point. I would challenge that that actually is not the case, because consumers ever increasingly have ways to adopt new products through the internet. And also, those that are providing those have ways to accelerate the deployment of the bringing those to market. So the key thing for this room is to figure out, okay, well, what's the next thing going to be? Well, if you're constantly waiting for the next thing, they're just going to be coming so fast, at some point, you can't address it. And so instead of focusing on, do you have the right thing that you're going to innovate around, you should instead focus on getting the muscle memory to actually be able to come and bring your ideas. So at that moment, do your best. Take your, pick, if it's Ripple, pick Ripple. And then from the sailing analogy, if in 3 months there's a new thing that actually is proving to be better, shift. And instead of waiting 3 months to wait for that other item. So the idea that I want to bring to this group is that third element of failure is it's better to bring a hypothesis and engage and fail than it is to just not do anything. Yeah.
Yep. And I think to recognize this is putting in Ripple as just a step one of 20 years of future innovation within banking. So step one is just to change the rail. As you go further up the stack, the level of innovation gets bigger and bigger. The kinds of applications that you can build on top of this are going to really transform banking.
Yeah.
So now I've talked a little bit about this. So we are working with our banking partners, and we found ourselves in the middle of this, so we're working with our banking partners on all these areas. And then to working with CGI. So the idea is that we do want to isolate the banks from some of the underlying complexities that you saw on the earlier slides. The distributed ledger is very complicated. Again, when Google first came out, people wanted to know, how did Google find those pages? How did I do a search?
Yeah.
And now everybody just uses Google. Right? They don't care how Google works. Well, that's the same sort of thing with this distributed ledger. If we can get to the point where you don't really have to know all exactly how it works, but just that it does work, and then you start thinking about all the applications and taking this out to your customers. So as an example, what we're doing is we go out to our banks, they implement Ripple. The first pilot may be just very simple. It may be sending $100 from one location to another, maybe even within the bank. Second step is they start sending it cross-border to another bank, and then they protect themselves, so they create a wallet that only has $100 in it. So the most, if anything goes wrong, the most that they could lose is $100. So it's very safe. Then if you look at Santander's announcement, what they've done is connected Ripple to Apple Pay, and then allow employees to send money. So they don't have to worry about the complexities of AML and what happens if a payment doesn't get, but they're just step by step testing this out.
Mm-hmm.
Then they'll start taking it to selective customers. So then we're starting to talk about different types of pilots. It's not a Ripple pilot, but it's a customer pilot using our technology. And that's really, again, how some of our bank customers are practically innovating. At the same time, we continue to change our model. So we are building faster, better distributed ledger technologies, distributed financial technologies. We are going to continue to upgrade Ripple Connect. So our customers, if they use our technology through CGI or other applications, that underlying complexity and the change, they're isolating their core banking applications from that.
Yeah, the idea here is my product team said, you have to make sure that you, at least if you're on stage with Ripple, you talk about the intelligent gateway. This is one example of 1,000 of how do you actually obscure the technology. And so this is just a pictorial of that. Probably not much more to say on that, but I do know that our team is very excited about the ability to add an accelerator to the deployment, so that you're not worrying about all of the sticky pieces of, well, how do we get a 25-year-old legacy system that has native interfaces and native communication methods to talk to a brand new JSON compliant J2E application? It doesn't work. Well, this is a way that might be able to address that, to get it done to test that earlier. So
Yeah, go ahead. I think that's. So again, as we talked a little bit about how do we bring this out to market? Well, how do we make sure we're doing this in the right way? One is to get all the right people in the room from the bank, so the payments team, the risk team, the compliance team, the capital markets team, operations team. When we get all those people together to talk about Ripple, we can come to the right solution. The other thing that we're doing is we're working with the W3C, the Fed, industry associations, and regulators. So it's really, this is an industry discussion. It's not a Ripple-only discussion. It's not a Ripple and CGI discussion. It's really getting all of our bank customers and all the other stakeholders involved.
Right. And it's changing the way that you engage. You actually, like with the example in the Agile method, you bring folks in earlier in the solution. With a regulatory body, it could be, instead of saying, look, we're not going to completely redo we're not going to be an Uber and say we're going to a completely different business model, but we're going to maybe we're going to add a different secondary control. We'd like to do it in a test market, and we'd like you to, to play along. I think it was in the Agile one, they had talked about how they went to the regulator and they were doing facial recognition, and there was a law, it was in South Africa, where it had to be done by a person. And they said, fine, we're going to challenge that. We're going to say that we're going to get a facial recognition software to do the same job. We'll control for that, and who gets better results. And if you agree with us that the facial recognition software gets better results, will you allow us to do that instead of a by the law mandated, a human comparison? And well, guess what? They actually proved that software does a better job than an untrained operator who's just processing paperwork. They're not trained in those same arts. So again, that's a way that it's not it's more of a dialogue as opposed to, just a request for authority or a request for approval. It's more of, can you be part of the solution? I think we're going to skip this. Yeah, we've covered most of those topics. Okay. Oh, yeah, well, we'll just, all of them. Innovation is not easy. Nothing like having CGI get up on here and say you should intend to fail. The idea, though, is you have to give yourself room to fail. You have to understand that there's value in doing that, because if you're looking for a solution to your hypothesis, you now have one less that you need to consider because you've ruled it out. You've also built in muscle memory to an organization that maybe you're frustrated by, depending on where you are in the organization. You might say, well, you know what, Charlie, that's a bunch of hogwash. You know, I can't affect the organization. My team is at maximum capacity. I have no one left. I've got the regulatory body who's just sitting here telling me I'm doing everything wrong. You know, I've got nothing left. Well, you know, maybe you do, you call your innovation project something related to compliance and regulatory aspects, and that's where you start to build up your muscle memory. And so instead of approaching a problem that you have with the regulatory environment, you actually approach that from an innovative, and that's where you get creative ideas and you change the working relationships that you have internally in that area. So that creativity, it could work, but that physical and mental way to approach it, it does help that. Don't expect perfection from everything is a critical item as well. Expect that in, yes, sir, you have a question?
The concept of accepting failure
Mm-hmm.
is a huge culture shift in finance.
Well, I could be wrong. I mean, let's be realistic.
It's not something, particularly the seasoned bankers that's in organisations
Mm-hmm.
working on legacy systems for 20, 25 and 30 years. That's never been part of the culture that failure is accepted.
Mm-hmm.
And so to suddenly come around and say, yes, failure is accepted and you have to fail to succeed.
Right.
It's difficult to
You see a slippery slope argument that starts to come in, where you go, okay, Charlie, great, you're telling me to fail. Well, so that means I get to, have my financial messaging platform, go down on every Tuesday randomly, and I'm going to let through some additional, fraudsters, because that's okay to fail, Charlie? No, that's not what we're saying at all. It's really starting with the ideas, and because that creativity, you can't have creativity if some of the ideas aren't wrong. Right? I think maybe that's the mind shift. I'm not sure how you localize and get people to not just be so adverse immediately. Because what I'm hearing you say is people would have aversion to this idea.
I'm not saying everybody has it. I certainly don't. But I know people within an organisation that would be adverse.
Mm-hmm.
And I'm sure there's people that just don't.
Mm-hmm. Yep.
Yeah, I think the banking is forgotten. It does fail often. Banking products don't work all the time. I've been involved in many projects over 20 years. I've been in the payments industry, and not all of them have been successful. I was involved in electronic purse schemes, which obviously failed because we don't have them today.
Yeah.
Involved in secure electronic transactions using mobile to thousands. Again, today we don't have mobile payments in our system. We have lots of things like the US EMV migration in 1994, which didn't happen.
Right.
We have a history of failure, and banks often brush over that because that would never fail. But it's been part of the industry since the beginning of innovation in the industry. So it's not a new concept, and we need to make sure that's remembered by the management of the organisations as they look forward to bringing innovation to life.
Mm-hmm.
Yeah, I was going to say, I think it is a bit of a mind shift, though, now in the sense of, we talked about Agile earlier, right? If you go Agile, it makes it easier to fail. So what you were talking about was some fairly large-scale programs that everyone's done. Some large-scale things they've done. But if you go into it thinking, hey, look, we know that this is improving yet, it's not very initiative, we want to try, we want to learn. Agile's a great way to do it. It's not going to be a $10 million, $20 million project, and we'll spend $500,000
Mm-hmm.
and just see, or less. And I think that's the mind shift. Certainly, the bank that I work for and other banks that are in the industry, we're getting to that. Let's go Agile. Let's see how we can do things in short little sprints. And if we fail, that's okay. What did we learn?
Right.
If we learned something, it's not a failure. But it's about how we do projects differently that allows us to set ourselves up for failure with learning is not actually a failure.
The earlier you know that it's a failure or what elements are a failure, that's what's important. Because when you spend a year and then it's a binary, well, this was a success or this was a failure, that's,
It's much easier to get funding.
right,
If I say, I'm going to know whether or not this is going to work in 2 or 3 months,
right.
then I might know if it's going to work or not in a year and a half. Totally different conversation.
And that was the timeline. So when CGI came into our office and said we want to integrate our solution with Ripple, it was a 3-month project. It wasn't a 3-year effort to completely change everything. It was a 3-month integration project. Now we're doing another 3-month to add some additional features, but we're talking 3 months at a time.
Yeah. It's hard to see through the lights, but we're kind of at the logical end. Are there other questions that we might? Yeah? Okay.
Yep.
Yeah, well, this is a great pleasure for us to be up here. Good dialogue for this afternoon. Actually exceeded my expectations, so thank you very much. And we'll see you all soon.
Thank you.